All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and this is your recap for Tuesday, June 26th. So, a bunch of things to go over today, and I'll try to have a little bit more of a positive spin on things today. So, one of the things that I think is still an issue, and I try to start with the negative first, and then I go to the positives. But yeah, I mean, it's still definitely an issue with international markets. I would say the positive. I'll give you a quick positive, is that the Hang Seng and the local shares, the Shanghai, which is you could look at the ASHR ETF here. They finished off the lows, right? I mean, they were at one point, I think this was down about 1.3, 1.4%, finished down 0.8%. The Hang Seng still finished in the red. The Nikkei squeezed out a little bit of green yesterday. So it's not great, but it's not horrible either. And then in Europe, the one thing that I didn't like today, and again, I think it makes a lot of sense to have some eyes on this stuff because we're tracking this. The U.S. markets were tracking this until about 11:30 today, which is when these markets close. But the DAX finished down 30 basis points. Keep in mind this was down huge the day before. So just so you can have a picture of this. So I do want to talk a little bit about international markets because I think we're really following it. So down 2.5% on Monday, and a little bit of green action. When I woke up this morning, it was basically around the highs of the session. Actually, I didn't wake up this early, but maybe around here when I woke up this morning, and it just kind of trailed off. Now we did come back at the end of the day, but still, you're talking about down two, so no bounce at all in Europe is what I'm trying to get out. So this is not to say that things can't get better, but I would still be pretty cautious about the overall global market. I think I showed yesterday the chart of ACWX. That's a good chart to look at as well. That is global equities without the U.S. in there, just to kind of see how that looks. So, no bounce there. So it's tough to kind of think about things and to say, okay, well, the U.S. did okay. We bounced a little bit today, but the rest of the markets look like a mess. At some point, this is going to have to resolve itself. And I'll give you the two types of things that I think can happen. Either not just emerging markets, but either global equities start to catch a bid and come back from these lows and complete breakdown, or the U.S. is going to follow. And today, so let's kind of go into that, and we can analyze a little bit. So I would say across the board, inside days. We're still holding on to that, very small move up here in S&P. Looking at S&P futures, up 20 basis points. We try to rally again after European markets closed. You could see that we got like a little bit of a relief rally from 11:30 to 12:30. I went out to pick up my lunch, as I always do. Go out and just for 10 minutes pick up my lunch. And things were at the high of the day, and then they just continue to kind of digress and go lower. There was a decent sell imbalance, market on close imbalance that I think kind of took the oomph out. There was another headline, I think, which brought us up a little bit, but all in all, without overanalyzing, we did not do too great today in terms of a bounce. Good that we finished in the green, but overall not that great. Same thing with NASDAQ. We got to the high of the day right around lunchtime, and then as more volume picked up, that was sold off. So there's not really much to kind of say, and overanalyze. We're still holding this point here in the for the top of value for June, which we're going to be in July shortly. But we have not broken down. But I would be a little bit worried if we can't really sustain a bounce. A member of Tribeca Trade Group talked about this today. I thought this was pretty interesting. They were talking about, I think in March, how we had an inside green day here. Remember this? And then we went lower. So again, I'm not saying that that's going to happen, but this was a pretty good observation. Kind of looks a little bit familiar, right? We broke. Things try to go higher here. Same point. You had an inside day here. You had a big red day. This red day looks almost exactly the same. That looks kind of eerie, doesn't it? This day on 319 looks exactly the same as what we saw yesterday. And then an inside day followed up almost exactly the same. So notice what we did the following day afterwards was we rallied, failed, and then the following day was a nightmare. So keep in mind, if we can't start to regain some of these levels, it may not be too good. So I think you want to, if you were trading today and kind of playing a little bit of the bounce, you want to make sure you're taking a target, even though if it's not a great target, I would not be trying to hold out for huge winners. I try to do that as well today. I had some winning trades on this morning that look great, and you try to be a little bit. You try to say, okay, I'm going to hold out and not just get a small winner, and sometimes the market can come out from under you. So just be mindful of that. But I did not analyze that as much before. This looks I cannot believe how similar this candle looks to this one. And same thing, the price ducking under the moving averages. So we're kind of this one is a little bit different. We got below the 50-day moving average as well. Here we're still hanging on to the 50. So I would say, an easy way to kind of think about this is if we break below, and this is what I said today in the trading room, if we break below the 50-day moving average, get out of the way. Your next stop is probably going to be the 200-day moving average. So you can also put on some hedges, hedge your positions. If we start to see us move down and break that 50-day, you don't have to necessarily sell your whole portfolio. Just make sure you've got some hedges on to kind of sustain or have a little bit of a cushion in case we do get that volatility. Today was a little bit different. The VIX ended up not on the highs today, still down, 8%. So again, this is kind of overanalyzing a little bit. Just use that 50-day moving average. I would say. IWM, a little bit better of a picture. Finished up 60 basis points. Again, the small caps seem to be withstanding, and holding up a little bit better. Again, if you kind of think about this intuitively a little bit with, the trade tariffs in focus, the small caps, of course, are going to have a little bit less exposure to that. The one thing I will say is this, which I don't remember if I mentioned in last night's video, but the longer these trade tariffs, now I think Trump mentioned that he's going to be meeting with the EU, and they're going to be making a date for that, which is good. But the longer these trade tariffs linger and the trade war lingers, the more it's going to erode confidence. I talked about a couple weeks ago, small business optimism was out, a multi-year high, the highest since 1983, right? But if you start to bring uncertainty into the way small businesses make decisions, and talking about input costs, that optimism is going to go down the tubes very, very quickly, right? And we want to see that. We want to see small business optimism. That means people are spending. So hopefully there's light at the end of the tunnel, and we can kind of go from there. All right, so a couple other things. So I spent more time on macro than I wanted to, but let's start with financials, because I see so many people are like, maybe this BAC and Citigroup and some of these big banks can get going. It's true, they're pretty oversold at this point, the banks. But I just don't know why people are putting so much faith, or why they want these things to go up so bad. For me, I've talked about how I've had an underweight position in the banks. I'm actually looking at a couple of them now because I think they've sold off to a reasonable level. But overall, I still think they're just not where you want to be in this market. And I don't know why so many people are trying to push the envelope with this group. I could go on for a half hour about how I just don't think the banks are what they used to 20 years ago, right? Their margins are not as high. There's a lot of things. It doesn't mean they can't bounce, But so I think they're bounce candidates at this point. But I just don't know why you would really want to, that being said, we have the stress tests coming out on Thursday after the close. I might be looking at a couple of trades. We did see a pickup in volume in some of the banks. Citigroup, which actually had a pretty good day, because if you look at KRE, which I believe finished in the red today, you look at Citigroup. I mean, Citigroup, this is an ugly looking chart. This did have a nice reversal hammer bar today, but still needs to get above, the short-term moving averages. But we did see some Citigroup calls. I like a couple of the other names that we saw call buying in. But I just don't know why people are hanging their hat on that they think that the banks need to go up for the market to go higher. They're not that big. And the other thing is, I always find it interesting when people don't actually look to see what the exposure is in the S&P. It's about 7.4%, right? So it's a decent weight, but it's not a 25% weight. So that the S&P does not. So my opinion is the S&P does not need the banks to go up to go up. If you have 90% of everything else going up, the banks, if they go flat or if they even go down a little bit, aren't going to prohibit are not going to prohibit the S&P from going up. So again, I just think it's a question, and I understand it's a question why they're not going up. They're not making money like they used to. And I know that from working on a trading desk at a number of banks, specifically Bank of America and Merrill Lynch for a number of years, and I saw that business deteriorate. It's just not the same as it was. Now that's only one portion. But they're also talking about how loan growth is just not that strong as it was. So I remain underweight. I think playing a couple of them for bounces are fine as well. IBKR, that's Interactive Brokers. Take a look at how much this thing has slid right into the 200-day moving average. I did put on a trade at the end of the day, so I'd rather play the brokers and some of the exchange stocks. Other parts of financials I think are more interesting than straight the banks. But again, it does drive me a little bit insane. Everybody wants these banks to go higher. I don't understand why that's such an issue, for why people are so stuck on them and want to play them. They do not look like they've got momentum. Again, I think they're good candidates for bounces. And especially going into an event, I think it sets up pretty well. What was the other one that I like? This Citizens Financial. I've played this before in option activity, and it's done pretty well. You could see if I bring this up here, you could see there was 3,600. So it looks like there is some positioning for these stress tests that are being announced after the close on Thursday. Mostly all either weeklies or July calls. So somebody may be looking for a bounce in some of these things. Again, I don't think that that's a bad trade idea. You just have to be comfortable with how much you're risking, because it's a very binary type event. You have to be comfortable if you're playing options. You have to be comfortable with losing the whole premium. Last week we had the first round of the stress test, which went fine, and there was basically no reaction. So this one, they're going to be talking about whether they can return capital to investors via dividends and buybacks. So maybe it might be a little bit have a little bit more to it than last week's. All right, other option activity. You could see from today that I think there was a decent amount of calls that went up today. There was some people who looked like they were playing, who looked like they were looking for bounces and some things. So, the first hour or so of the day, we did see some Apple call buying. We saw some call buying in a couple other names, and then it kind of went radio silent for about an hour and a half, right around that when Europe started to dive. And then we saw some call buyers kind of step back in around lunchtime and throughout the afternoon. Some Momo calls went up. This is a name that's really gotten pushed down. All the way down almost to the top of value, almost back to the 50-day moving average. Big move higher. I was playing this name. Luckily, I got out of this one before it did this thing. But so I took a very small position in Momo today. A few other trades that caught my eye. Big diamonds trade, which someone asked me, they said, oh, maybe it's a short hedge today. I don't think so. I don't think you buy calls aggressively like this out to January for a hedge and so close to the money. when you buy a hedge, usually, and think of it as when you buy a hedge yourselves, you want to spend as less money for insurance as possible. Something pretty far out of the money, something you know, uh, you know, not going out, not as expensive as going all the way out to January. So I like this trade. 245 calls. It's right around here. For January, and you would think that this trade war and some things would be past us. I'm not saying that all of the price action has been dependent on the trade headlines that are going on, but I think it's contributing to it, and I don't think that's a crazy conclusion to make. So I did like that trade. It was a nice chunky trade. That's $1.7 million of premium that somebody paid in that. A few other trades I mentioned, Citigroup. There was a big trade in LCI, calls bought, put, sold. GBT, which has data out this week. Biotech company who has data coming out, I think, towards the end of the week. I'm not 100% sure about that, but July calls bought. Sorry, it appears, and I'm not 100% sure on this, but it appears that July 50-65 call spread was bought. Also, some alley calls going up, another financial. January 28 calls. So I mentioned before, a lot of the call buying in the financials and the banks was either weeklies or July calls. There was an exception to that. It looks like alley calls went out a little bit further. There's a little bit of Morgan Stanley calls. There was a little bit of box calls, and I missed the last one. Some of the stuff is pretty small, so I don't tweet it out if it's a pretty small order. But this was 130,000. This was in the morning, and then I believe there was one later in the day. Also, again, small stuff, $44,000 in premium. I'll need to check open interest with this because it does have some open interest on it. So I'll mark it that way. I always put a little asterisk. It reminds me to check the morning. Now, notice I have one on BABA as well. We saw BABA calls a couple times today. We also saw a little bit of BABA puts. I will say this, so you can see there's a decent amount of calls that went up today. Not so many puts. Not a lot of puts today. Not a lot of heavy put buying. So that's also perhaps a little bit of a good buy, a good signal that people are out there looking to kind of buy the dip a little bit, not crazy aggressively, but a little bit. And I'll kind of leave it here. One of the strategies that I talk about in the trading room, and I apologize, this video is a little bit longer than normal, is to kind of go after names that are your leaders. Whenever we have a decent pullback, I always go to the quality. So Amazon, I structured a trade yesterday for Amazon, inside day for Amazon. We'll see how it goes tomorrow. It's tough to really make a conclusion. You can't really make a conclusion other than a small bounce. We'll see if we can get back above this gap tomorrow. And then things like Salesforce. Salesforce had a pretty nice day, although it did not close on the highs. But I would watch for it. I was actually going to put on a trade in Salesforce today, and I said, let's see how it closes. And it did not close above the short-term moving averages, so maybe wait one more day on Salesforce. But I'll leave it there. There's a number of other names to kind of talk about. But, waiting for a little bit of confirmation rather than just, a little bit of green, I think makes sense. So, watch for things to kind of take back some of those levels from yesterday. The short-term moving averages would be a good thing. And, maybe yesterday's open. All right, guys, thanks for watching, and have a great night. See you tomorrow.